All right, everyone. It is 6:03, so we'll get started. Welcome to Forex for Beginners. So, what we're showing on the screen is our Epic site, and there is so much valuable information in our back office. I always like to run through the features of the company in case we have anyone that's brand new. So, the main live sessions are 7 a.m. for the New York session, where we have our live traders and educators. Then 9 p.m. Eastern to cover the Asian trading session, and then 2 a.m. for the London session. So no matter where you are in the world, there is a trading session for you. In the back office, all of the live calls are recorded so you can catch up to them. But it doesn't stop there. There's normally an intro to Forex call a couple of days a week at 11 a.m. There are several honors classes, one from Tokyo Pips, and then my favorite, Jojo, who teaches the market maker theory. His class is normally a couple of days a week at 5 a.m. And there's a weekly forecast that's done Sundays at 8. So much good information, not to mention the incredible 2-week syllabus and the education that Coach Max has put together. She recently launched the intermediate section. So much good stuff, and there's more to come. There's a sniper academy coming, there's an advanced section coming, so lots of good stuff here at Epic, not to mention our Forex signals that come out through the Telegram chat. David Luciaga has added his signals, so those of us who are familiar with him from a previous company know how good those signals are. Of course, we have our very own Damo with his US 30 and indices signals. So lots of ways to win and get educated here at Epic. So the purpose of this class, Forex for Beginners, we meet once a week, and it's really just to kind of fill in the gaps. Learning Forex can be like learning a second language. So what I'd like to do here is introduce concepts that you'll hear on those live calls, and just kind of go over some of the concepts so that you won't be intimidated. Just kind of break it down, try to keep things simple on this call, and just to give you a platform to ask questions. And I didn't even cover all of the wonderful calls that Impact Over Profit does throughout the week. We have some of the leaders on the call here. So definitely, if you make sure you're connected to all of the Impact Over Profit, which is Damo's group, make sure you're connected to all those telegrams so that you can know the schedule for the week. So this class is just one of many that we have all throughout the week. So with that being said, the format for the class, normally I'll go into like maybe a 15 to 20 minute discussion over an important topic or something new. And then we go straight into Q&A. You guys come off mute. By that time, we're normally in trading view, and you can ask questions about what we covered today or just something that's been on your mind. And we'll do our best to get those questions answered for you. And before I forget, all of these classes are recorded and placed on my YouTube channel. So I'm going to go into the chat and make sure that is posted again for those who joined after it. So there's the YouTube channel. It has all of these recordings plus ones we've done in previous weeks. If there's something that you missed or wanted to listen to again, or send to a team member as well. I especially like to go over how to set up your demo account and how to set up your trading view if you're super brand new to trading or to Epic. So before we get started, let me make sure or see if there are any brand new people on the call. So put a 3 in the chat if you are super new and don't have your demo account yet. If that's you in the chat, place a 3 so that I can know you're here. All right, Savvy, that's funny. Savvy and now Mo, y'all are great. Savvy and Mo are our other leaders on the call. Mo does his markup sessions Thursday at, I think you said, Mo, you said 7:30, didn't you? Eastern?
7 o'clock Eastern.
7 o'clock, I got it wrong. And then Daisy and her, Savvy and her mom, Daisy, lead an amazing opportunity call Wednesday evening at 8:30 Eastern. I think I got that time right. Right, y'all? Correct. Please correct me if I didn't. So lots of great things to plug into.
Correct.
All right, thank you. So give me a second. I will share my screen and we'll talk about a couple of new concepts that may be new to you this evening. So the topic is trade entry tips. And some of the tips that I'm going to cover may or may not be new terms. Maybe a lot of times you'll be on the Epic Live calls and the educator may be, mentioning a term or going over a concept and it may go, a little over your head. So I like to grab those concepts and kind of introduce them here, keep it kind of simple, just so that you can feel more comfortable and kind of get used to the language that's used in all the live calls. I don't think she's on the call, but Ashanda does a wonderful markup class as well on Mondays. And I was on her call last night and she went over the ADR, which we're going to introduce today. And so, yeah, that's the purpose. It's just to go over some entry tips to give you some extra confluences, and I'll explain what that term means, and just kind of introduce some concepts in case you've heard them on a call and you weren't quite sure what they were. So when we say trade entry, we mean the point where you actually enter the trade. You may hear this term sniper entry, and what that refers to as is getting into the trade at just the right time so that one, you're either not in the trade very long and price just kind of takes off, meaning if you were going for a buy, price increases. If you were going for a sell, price drops. And a lot of times the entry makes a big difference in your trade. It can be the difference between, like I said, not being in the trade very long and it taking off and hitting your TP. Sometimes we have the direction right, like we know price is taking off in a certain direction, but if we're in too early, either we're just in the trade a little longer or maybe we experience some drawdown. And when we say drawdown, that means you're in the red longer than maybe is desirable. So we'll just go over a few tips and tricks to getting some of the best entries. So the first concept that I want to talk about is the average daily range, better known as the ADR. So what is it? What is the average daily range? So on the daily time frame, because in TradingView, you can look at, let's say you're looking at Euro USD, EU for short. Say you're looking at EU on the daily time frame, because our popular time frames are the 4 hour, the 1 hour, the 15 minute, and maybe even the 5. But if we're on the daily time frame and we can take a look at how many pips did EU move in one day, that's how we form, or that's how this number is formed, the average daily range. So let's take a week. And these are just made up numbers. Let's say last Monday, EU moved 100 pips for the entire day. Tuesday, 101, Wednesday, 102, Thursday, 103 pips, and then on Friday, 104 pips. If you take the average of all those numbers, add them up, divide them by 5, then it's going to be that middle number, 102. So the ADR, the average daily range of pips for EU in the last 5 days would be 102. And that's how the ADR is calculated. Now, you can change the number of days that it impacts. You could do the last 5 days, you could do the last month, you could do the last year. But the gist of it is about how many pips does this pair move in a day? So there's actually a chart that I found online. And not only can we see the ADR for 2020 for all the Forex pairs, but we can look back over the last few years to see how that ADR has changed. So just looking at the first one, so AUD CAD, that pair for 2020 is averaging about 98 pips per day. Odd Chef, 88, odd JPY, 112. So this will list the odd pairs, the CAD pairs, the Euro pairs, and you notice, look at Euro odd, 227 pips a day. So normally when you talk about volatility, normally it correlates to the pairs that get the most pips in a day. You can see Euro Chef normally averages only about 43 pips a day. So this is half of the pairs. And on the next screen, it shows the remaining ones. So here you have your GBP pairs, definitely higher number of pips. A lot of people who like volatility like to trade the GBP pairs because you can get more pips in a day if that's important to you. Then your NZD pairs, which is going to be smaller numbers, and then rounding off some of the USD pairs, and then gold, which is XAU USD. Gold is a favorite of a lot of traders because of the capacity to get that many pips in one day, which is also like why it's not recommended if you're if you're a beginner. If you join Epic and you're new to Forex on Monday, you're probably not going to try to trade gold by Friday. You want to give yourself some time to get familiar with some of the other gentler pairs that don't move as fast, maybe not as many pips, just to get your feet wet. And then you want to work your way up to gold. GBP NZD looks like it's almost second on the chart in terms of the number of pips that it has per day with 238. And I'm going to, keep my eye on the chat in case there are any messages. And I do think we have a beginner in the chat. So Darvis, welcome. When we wrap up, I'm going to go over some information or message you privately and send you some a few links to some videos that can help you get set up with your MetaTrader account, how to set up your demo if you want to use a particular broker, but I'll make sure that we come back and take care of you. All right, so ADR, now that we know that you can look on this chart and figure out about how many pips does a certain pair get, how does that impact our trading? A couple of ways. So first, let's take a look at the TP, take profit. So let's say I'm trading a pair and the ADR based on that chart is 60. Well, if price will only typically move 60 pips in a day, I need to make sure that I'm realistic with my take profit. If I'm going for, 80 or 90 pips, then this probably isn't the pair that I want to trade. Or if I have my TP set at 80 or 90 pips, but this pair only moves 60 in a day, I've not set myself up very well to actually hit that TP today if I'm intraday trading. If I want to be, in and out in the same day, then it's important to match that TP to probably, under your ADR, just to make sure you can hit your TP that day if that's important to you, if you're in and out of the market and intraday trading within the same day. Or let's say I'm in a trade already and I'm approaching, maybe price has already moved, 50, 55, getting close to that 60, then maybe I want to trail my stop loss, trail my stop, so that if price, abruptly turns around, I won't lose all the pips that I've gained. So if price has already moved 50, 55 pips, then it could be, if I haven't hit my TP yet, maybe I want to adjust it or make sure I've trailed my stop. And I do have a video on my YouTube that shows you how to set a trailing stop. Okay. Now, in terms of entries, so we're looking at this example where the ADR is 60 and price for the day has already moved 50 pips. So let's say I'm in the New York session. Maybe it's 1 p.m. New York is 8 a.m. to 5 p.m. Eastern. So say it's 1 o'clock, maybe 2, and the pair that I'm looking at has already moved 50 pips. Do I really want to go into a new trade at that point, knowing that it's already that close to the ADR? But on the other hand, say it's maybe 11, 12, and maybe that morning, that pair has just not moved at all. It's only moved about 10 pips. Then that would let me know I have a lot of room to go ahead and do a trade and perhaps reach that TP that day. So knowing the ADR of the pair that you're trading and looking at how many pips it's already moved that day can help you with your entry and your TP. All right, so the next, I guess, vocabulary term or concept that I want to talk about is the RSI, and that stands for the Relative Strength Index. And what this indicator tells you is, where is the momentum in terms of price? Is it going to continue buying? Is it going to turn around and sell? Does it have more room to sell? It kind of tells you, it helps you gauge the momentum. Am I going to be buying for a lot longer? Is it ready to buy? Is it going to turn around and sell? So that's what the RSI is used for. So it's a number and it ranges from 0 to 100. So the higher the RSI is, particularly 70 or higher, then that means it's been buying for a while. It's almost to the point where the term is overbought, where it doesn't have any more room to buy. So price is going to turn around and it's going to sell. And on the lower end, 30 and under, that means price has been selling for a while and it's almost to the point where it's just not going to sell anymore and it's going to turn around and buy. So that's called oversold. So this image here is what one of the RSI indicators looks like on TradingView. So it has this kind of background here that you can customize, and it's going to change this RSI. And here on the right side, I'm showing 20 at the bottom, 80 at the top, and you can customize this. But the point is to be able to look at your RSI and know if you are in this overbought range, the 70 to 80 range, or if you are in the oversold area around the 30 or 20. Those are the main reasons that people look at it. So here is the same RSI indicator. And what we're showing is how it looks on TradingView. So I just took a snippet to show you how it looks. So here are my candles. The green candles indicate your price is moving up. Your red candles indicate that price is moving down. And here on the bottom, if you'll notice, the RSI tracks with price. So let me get an arrow here. So here we can see that there's a little uptrend. And as price was moving up, notice the RSI was moving up as well. And then when price begins to fall, you can notice that the RSI begins to fall as well. So here's a really cool thing about the RSI. It can almost predict, may be too strong of a word, but it can indicate when price is going to possibly do a pullback, which is just a small change in the other direction, as well as just an absolute reversal where it changes from an uptrend to a downtrend. So if you notice here, price was rising, and what did it hit? It hit that over 70 marker. You can see here, this is our price, the level of the RSI. So once our RSI reached the 70 or higher, it's close to that overbought area. And what happens? It immediately begins to sell, and then it falls back down. And then once it hit that 25, 20, 30 area, it began to rise back up. So the RSI is a really cool tool that you can have on your trading view. And there are some people who use it, completely as a strategy. I think what we're recommending here is it's a great confluence. And what confluence is a reason to take the trade. So, you may or may not have your own strategy that you're using to trade, but the RSI, the ADR, these are great extra confirmations to give you an overall confluence or confidence level in taking the trade. So it's just something that you can add to your trading strategy, that before you take this trade, let me check my RSI. Oh, one point I want to make before we talk about trading view is, well, let's go ahead and go into trading view. So in trading view, you're pretty familiar now that when you click on the FX, that's how you add your indicators. So when you click on the indicator button, you type in RSI. This is the one that I've been showing, just the relative strength index. You'll click on that title. And then here is the settings bar that you can adjust for the RSI. And the only thing that I tend to change, you can check or click on that background and it will remove, let me show it here. You can remove this pink background so that you just have the RSI line. And then you can change the color of it and the line and the thickness of it. So you can customize it a little bit. The input, I didn't change at all. So that's how you would put the RSI on your trading view. And, trading view has lots and lots and lots of different variations. I like that one because it's pretty simple to use, the relative strength index one. So one other point before we talk about the last area of tips. So here's how you can use it in a trade. Obviously, this is a good area to take a buy. And let's say whatever strategy you're using, you enter the buy here. So you could do a quick check. And what you can do, let me add a line here, because I like to go over things here before we go into trading view. So there we go. If I'm thinking about taking my trade here, notice that my RSI is pretty low. It's in the 20s, probably no higher than 30. So that means I should have lots of room to take a buy. And that's exactly what happened. But what if I saw this pullback here? Say I missed it. I missed my entry down here. Price made a pullback and I'm thinking, maybe I can catch the rest of this buy. It's not too late. I've heard I can enter a trade after a pullback. So I am ready to enter my trade here because I think the pullback is gone. So what you could do is check your RSI. At this point, your RSI is in the 70s. So that's probably an indication that there isn't much buying room left. So generally, it's not thought to be safe to take a buy when your RSI is this high, because what happens? It did go up for a little bit, maybe 10 more pips, and then it immediately turned around. Same thing in the other direction. If price is, here, and you see a little pullback and you're thinking, maybe I can jump in and catch the rest of the sell. You look at your RSI, ooh, it's pretty close to 25. It's pretty much in the oversold area. So it's not as safe to take a buy, to take a sell when your RSI is in the 20s. That's an indication that price may not sell for too much longer, and it did come up. It came down for a little bit, but depending on your pip goal, I'm not sure that you would have hit your TP. So that's how we can use the RSI. It can be added to no matter what trading strategy you're using. If you're going for a buy, check that RSI, make sure it's not in the 70s. And if you're going for a sell, make sure that RSI is not too low in your 20s. Okay, and we talked about how to put it on your chart. Okay, and this is the last tip that I wanted to go over today, and then we'll go straight into our Q&A. Oh, yeah, it also helps with staying in trades and not getting out too early. Absolutely, Mo. So let's go back and make that point. So not only can the RSI help you potentially not get in a trade that you shouldn't, but let's say you were a little nervous and you weren't sure if price was going to continue buying. If your RSI was only like 50 or 60, that could give you some confidence that, yeah, there's a little bit more room to buy. Or maybe you were in a sell and the RSI was falling down. Maybe it was just under the 50, the 50, the 40, the 30, that could tell the 50 and the 40 could tell you, yeah, there's definitely more room to sell. So good point, Mo. Yes. All right, so here's the last point. And I wanted to talk about this one because honestly, I did not learn this lesson very early on in my trading career. And I think I wish I had. And you always hear the educators talk about price action. Well, that's just a fancy term for what are the candles telling me? So we know the general that, the green candles mean price is going up. The red candles mean that price is going down. So say I'm in my strategy and I'm set for my buy or I'm set for my sell. Did you wait for the candle to close before you took your entry? And why does that matter? Here is the lesson that I wish I had learned early on. Wicks initially look like candle bodies while that candle is forming. So let's say I'm on the 15-minute chart, which means every candle takes 15 minutes to completely close. And then another candle starts, and it takes that candle 15 minutes to fully form and close, and so on and so on. So if you're on the 15-minute chart, every candle takes 15 minutes. And when we go into Trading View, I'll show you the little timer so you can see how much time is left on that candle. That's very important because you definitely want to let that candle close before you take your entry, especially if you're looking for a particular price action. So let's say that we want to take a buy. And we're going to work our way kind of backwards. So at the end of the day, let me do a shape, an arrow. At the end of the day, after our 15-minute candle, this is what it looked like. So we'll just do a quick review of a candlestick. This is the body, the part that's like a fully formed rectangle. And this skinny line is called the wick. So this candle being bullish, typically it's the green ones are showing bullish, meaning price is increasing. When the 15 minutes first started, the candle opens here and it ends at the top. So this is our completed picture of the candle. But what I want to bring your attention to is that candle can go through all sorts of transformations in that 15 minutes. And just because it looks like this now, it doesn't necessarily mean it started out like that. So look here on the bottom left. When that candle was open for 1 minute, it probably started as just a little small green rectangle. That's how it started. 10 minutes later, you could have a fully what we call engulfing candle, meaning it's going to swallow up the candle that was before it. This is where it can be a little deceiving, because when you see bullish engulfing candles like this, you're expecting potentially a nice upward movement after it, right? But guess what? Just because price is like this 10 minutes into that candle, price can immediately pull away from the bottom and it ends up like this. So this is the final look of the candle. But what happens if you took your trade 10 minutes in thinking that the candle was going to stay like this? You take the trade 5 minutes later when the candle closed, now you see a huge wick on the bottom, which may or may not affect your analysis. So when we go into TradingView, we'll see if we can find an example of that. But it's kind of a good tip to keep in mind is to make sure you let that candle fully close and then make your determination if you're going to enter that trade or not. So it's right at 6:35. I'm going to switch gears and go to TradingView. You guys come off mute. Let me know if you have any questions, anything you want to go over. 1 second and I will share my screen. All right, so here is TradingView. I'm going to take off some of my indicators so that it's a little cleaner to look at. I'm going to right-click, reset my chart. So here on the bottom is the RSI indicator that we were talking about. What I can do here is click on this settings icon. I can take away that background if I want it a little cleaner. I can change that line to blue. Maybe I want to make it a thicker line. I can do that. And I can also change these numbers. So maybe I want to highlight the 80 and the 20. So you can kind of change the gauge here. So that's how the RSI looks. Here's the indicator button where you can type in RSI and click on it there, and that would add it to the chart. Anytime you want to not see an indicator, you can click on this eyeball button and now it's hidden. Click on it again to bring it back. So I wanted to make sure we saw here. Okay, so we are on the 15-minute chart. Now let me go to something a little simpler like EU. I was looking at gold earlier today. Let's go to one of our beginner-friendly pairs. So now we're looking at EU. We are on the 15-minute chart, and here is our timer. This candle that is forming has 6 minutes left. So that's how you can tell how much time is left in that candle. Let's go down to the 5-minute just to see. Oh, take a look at this candle. It has lots of action. There's 1 minute left and it's kind of moving all over the place. So at this point, we don't know how this candle will look when it closes. Will it close with all that wick showing, or will it be like a full body candle with very little wick? We don't know. This is why we wait until, oh, look at there. This is why we wait until this candle is completely done before we enter our trade. At least if you're a beginner, that would be wise. Yeah, so we're seeing lots of movement here. In the next 30 seconds, let's see what happens. I've seen candles that look like this the entire time, and then a few seconds before it closes, it goes bullish. So you just really never know. We have about 12 seconds left for this candle. I think it's anybody's guess to see how it's going to close. Okay. So it closed, and I'll zoom in a little bit. This is how that candle closed. Um, Mostly body and then some wick here at the bottom. And look at this candle. This is a great indication. It's been green, it's been red. Now it's red again. And this is a little exaggerated because we are on the 5-minute, but the point is that candles can be deceptive before they close. Now we're bullish. Are we going to stay bullish? There's a full 4 minutes left. So we'll just kind of watch this in the background to see how this candle changes in the next 4 minutes. Okay, now it's really shooting down. But the point is, when it first opened, you couldn't really tell how far the movement was going to go. And we still can't because there's 4 minutes left. All right. Anybody have any questions about what we talked about today, or anything else in general? How's everyone's trading going? Feel free to come off mute or type it in the chat. And also, I want to reach back out to, I think it's Darviz. Hopefully I'm saying your name correctly. And we'll have some, so if there are no questions, then I will speak with Darviz, and I'll introduce you to some of the beginner concepts and kind of tell you where to start. So give me a second and I will share my screen for her. So let's do a new share. Thank you, Savvy. I appreciate that. So for our beginner or beginners, give my screen a chance to catch up. Setting up your demo account. And this video is placed in my YouTube. Oh, Savvy. Good to know. Okay. Does he need help savvy setting up a demo account, or is he already set and on his way?
Hey, Tasha. Yeah, he's already set with that. He
Okay.
knows exactly what to do.
Awesome. Awesome. Perfect. Well, let's get away from that then. Let's go back to TradingView. Thanks for cluing me in. All right, so let's get back to TradingView. And this candle is still going crazy. There's 1 minute left. Still anybody's guess as to how it's going to close. Yeah, I have definitely been stung. I don't know about anybody else about getting into a trade, and then the candle that I'm on does something unexpected, and it actually made me second guess my entry. So that is definitely a lesson that I'm learning, to wait until that candle closes. All right, you guys are quiet. Any other questions that I can answer? Anything about TradingView that you had questions about? David is asking, what indicator is used for Tokyo Pip's ketchup mustard strategy? Good question, David. I have not seen that strategy, but I'm going to give you one indicator that you can use that I think may help with that. Let me see if I have it on my chart. Yeah. If we take a look at this one, it's the Forex LG EMA setup. Oh, that candle closed bullish. Who knew? So if I go to the Forex LG EMA setup, then here are some settings. And if I look at the inputs, so the first, these indicate these EMAs, exponential moving averages, are going from the smaller ones to the bigger ones. And they have nicknames: ketchup, mustard, carrot, water, mayo. So the 50 EMA, 1, 2, 3, the fourth one down. Yeah, that's your water. So the ketchup and the mustard, now I'm not sure which EMA she's using, but the point is you can use this indicator to customize it to match whatever that strategy is. So in this case, I'm using the 8 and the 13 as the smaller indicators. Yeah, Eddie is asking, the line going up and down and changing colors, is that automatically? Yeah, for this candle, Eddie, is that what you're asking, or the EMAs? So the EMAs track with price. So as price is erratically changing like this, yeah, it's constantly moving to reflect where price is, as well as your RSI. Both of these indicators track with price. Oh, thank you, Daisy. Yeah, I try to keep it simple. I remember what it's like to be in a class and you hear these terms and concepts and vocabulary. So as long as it takes, we'll just keep going over concepts that are commonly used and just try to make it be digestible. Eddie, did I answer your question?
Yeah, you did, Tosh. I'm sorry. I lost my screen there for a moment.
Oh, no worries.
Yeah, but yes, you did.
Were you asking about the EMAs changing or the RSI here at the bottom?
No, the EMAs, I believe it is above the line at the bottom, or if
Like
I'm making
the purple, the yellow, the blue, and the red.
Yeah, well, at the top where the line is going up and down, doing on the candles.
Yeah, right. The actual candle itself.
Yes, it's bouncing up and down. It's turning green and red, and then So yeah, that's what I meant. Was that is that done automatically as we're watching that candle?
Yeah, that candle is reflecting how price is moving.
Wow.
Yeah. Yeah.
Okay.
So here are the prices here on the right. So, and this is why I love TradingView, because it's telling you the green background with the white numbers. That's telling you there's a minute left for this 5 minute candle. And, the 5 minute has a lot of activity. If we go back up to the 15 minute, yeah, price is really just moving like that right now. And so it's hard to gauge it. Is it bullish? Is it bearish? Well, it's definitely bullish, but it's kind of being a little volatile, at the moment. But the whole point is, if you were going to enter a trade, you would let this, if you were on the 15 minute, you would let this countdown go all the way down to 0. And then, because each of these candles gives you a final picture, and we just don't know what this final picture is going to be until it literally counts down, because it changes so much.
Yes, ma'am. Got it.
All right. Thank you, Henry. Thank you, Henry. I appreciate that. Thank you so much. So it's yeah, once we see the candles here, this is the picture of it after it has closed. And closed means, the time where that timer runs down to 0. But from the time it opens to the time it closes, sometimes it can be deceptive and it can be a little tricky. All right, so tonight we covered the ADR. There is a way to put an ADR indicator on your chart. I didn't want to do that tonight because I wanted to keep it really simple. I think as a starting point, it's good to just, if you have a couple of pairs that you always trade, just kind of figure out from that chart how many pips they move, or we can do it, you can do it manually. Let's go to EU on the daily time frame. Let me get rid of some of these lines to keep it simple. These were some zones that I had marked. So, I wanted to show you guys the measure tool or the ruler tool. So let's go to this day, because price moved quite a bit of pips. Let's right click reset chart. Then I'm going to zoom in. So let's say this was, if you look at the bottom, TradingView tells you the date. So based on where my cursor is, this dotted vertical line, this was December 1st of this year. So let's see how many pips did price move on that day. So I'm going to hide this EMA setup just so that we can have things be a little clearer. And I'm going to click on this measure tool. So I'm going to get the wick, because that counts, and I'm going to drag it down until the bottom of the candle. That is 150 pips. So on December 1st, that was a pretty big day for EU because it moved 150 pips. If we look at, and then I can delete it. If we look at the next day, December 2nd, here's our date at the bottom. I'm going to click on the tool. There's a tiny wick at the top. I'm going to drag it down to the bottom of the wick. 76, 77 pips. So that's how you can tell how many pips price moved. Yeah, absolutely, Mo. Because yeah, it is a little confusing. So let's say that I took a buy. So long refers to buy, and selling refers to a short. Let's say that I took a buy entry. I got in here. My stop loss, I'm gonna put, well, this is the daily time frame, so that's a pretty big stop loss, but just for example purposes, let's say my stop loss was down there, and let's say I stayed in for a couple of days and I exited there. So I believe I've covered this in a previous class, but the risk to reward is a 4 to 1. That means I'm risking, and I want to make sure I'm telling you right. If you don't trust the tool, you can always count pips the old-fashioned way by subtracting the numbers here. So 1911. Yeah, so 700. Let me go on a smaller time frame and make sure I'm doing this right, because I want to make sure I tell you correctly. So if I enter the buy here, and if we can always use our calculator to subtract. Let's say it was a really short trade. Yep. So if I entered here at 1.1925, let's write that down. So my entry was here, 1.1925. And then I exited the trade here at 1.1979. 1.1979. Then if we do a subtraction, we will get 54 pips. 79 minus 25 gives us 54 pips. And so it's this middle number here that tells you the amount of pips. And so here's our risk to reward ratio. But hopefully, Mo, that answers your question. So it's that middle number. They definitely have so many figures on here. It definitely makes it confusing. And so if it was a bigger trade, if we took it all the way up to here, then that would be 192 pips. So you can trust the tool, or you can always do the subtraction yourself.
I'm gonna pick on him.
Yeah.
Alil, yeah, that's him. He's the one who's asking the question. So I'm asking him if he got it. You can unmute yourself, Alil.
Talk to us.
That's my brother-in-law, by the way.
Oh, welcome, welcome. Welcome.
Thank you. Thank you.
Awesome.
Did you get what she was saying?
Yeah, I got a little bit, but a lot of it is, it's not clear. The phone line was cutting off. I don't know if it was me or you guys. And
yeah, let's go over it again for you. So let's do it with a very small trade. Let's say we enter here. Sure. Let's say it's a long. So let's say we enter here. Our stop loss may be there, and we're going to go up to this point. So a relatively short trade here on the 1 hour time frame. So there are two ways that you can figure out the amount of pips. I guess some would call it the easy way is just to look at this figure right here. that's telling you that this trade went 70.9 pips. If for some reason,
the one in the middle right there.
yeah, the one in the middle. They have so many numbers, so it's definitely confusing.
Yeah, it is confusing.
Yeah, they're like 15 numbers here. But that one is your pips right there in the middle.
Okay, the one in the middle, the 7.9, 70.9.
70. Mm-hmm. And if you wanted to double check it, what you could do, that price is 1.19. Let me make it bigger. That price is 1.1995. So we can write that down. 1.1995. That was like our TP. And then we entered at, see how I'm matching this to that black background, 1.1924. So that's where we entered, 1.1924. So let me write that down. 1.1924.
Oh.
And so like the old fashioned way is just to subtract those numbers. And you can have 95 minus 24, which is going to give you 71.
71 pips.
So 2 ways to get your pips. You can do the math and subtract yourself, or you can just look right there at the tool.
Okay.
Yep, 2 ways to do it.
Okay. Do it. Okay.
Mm-hmm.
But I got another question. Last night I tried to go on Asian market. That was around 2 o'clock in the morning. So I do the new order. I put everything. I'm new on this. That was my first night trying to go on the chart.
Okay.
So I was trying to buy. No, I'm sorry. I was trying to sell. I went and do the new order, and I trying to sell, and I put from the stop loss and the other one, what do you call it again? The take profit. But anytime I put the calculation, I didn't get exactly the pips in the middle, like we say right now. But
yeah.
I put it was like a 309. And
so were you in MetaTrader 4 putting in the order?
Yes, I was in yeah.
And did it take it? Did it take the trade, or did it tell you invalid parameters?
Invalid.
Yeah,
I knew
where you were going. I know what happened. So here's what happened. So let's say you're taking a sell here, and let's say your take profit is here, and let's say your stop loss is here. For a sell, these numbers have to make sense in MT4. So here is your stop loss. Your stop loss is going to have to be higher than your entry price.
Yeah, your take profit.
And then you're going to have your take profit down here. Your TP, right? So in MetaTrader 4, when you enter that trade, you got to make sure that the stop loss is a bigger number than your entry, and that your take profit is a smaller number than your entry. This is how it works for a sell. Okay. But if you were doing a buy, it's the exact opposite. So for a buy, your entry may be here. Okay. And then your take profit is going to be higher because you want price to increase.
Yeah.
So your take profit, we call that TP. That's going to be
Okay.
higher. And then your stop loss is going to be lower because
Low.
it's going to be smaller than where you entered from.
Yeah, the phone is cutting off again.
Is it breaking up? Okay, so anytime you get that invalid parameter in MT4, it means that, yep, it means that either your tape for buy, and let's.
It's possible that, you know, you had the stop loss in the place of TP and then the TP in the place of stop loss. You know what I mean? Because it has to make sense. If it doesn't make sense, it's going to tell you it's invalid. But basically what she was showing you right now, that's how you can calculate it. That's how you can get the correct number. So when you put the tool on the chart in TradingView, that tells you exactly what numbers you should put in MetaTrader 4. You just got to copy the same numbers that you see in TradingView and then just put it on your MetaTrader 4 and it should be good. Thank
you, Mo.
Oh,
yeah.
You're welcome. They have it on TradingView, right?
Yes, that's what she was just showing you in TradingView. The little chart, the little.
I didn't see what it's showing me. That's it's the phone.
Yeah.
Phone is cutting. I'm in Canada. That's why. So.
Yeah, I got you. I'm gonna hit you up later. I'm gonna show you. I'm gonna give you a little.
All right, that's cool.
I'm gonna call you later on.
Thank you very much.
No worries. It's very easy to get that mixed up. But yeah, that's exactly why MT4 will yell at you, as to borrow Mo's term.
Oh yeah, they do.
Yeah.
It says invalid. You're like, what did I do? What did I do?
Yeah. And I tried again. The same thing.
Oh man, that's frustrating.
I tried to go up and down. I said, man, I think sometimes I was saying probably this is not for me.
No, it is for you.
You can do it. You can do it. One way around that. I want to tell you a backdoor method, but just be careful because we always want to have our take profit and our stop loss set. However, you could just enter sell with no take profit and no stop loss. And that way it will let you into the trade. But you must immediately come back, modify, and put in your stop loss.
Yep. Or you can drag the lines in MetaTrader 4. Maybe that's a little bit too complicated, but that's what I usually do.
Yeah, that's better. Yeah.
I just drag the lines.
Wow.
But I'll show you later though. I'll call you later and show you.
All right, no problem.
Right,
Thank you very much. Thank you.
Hang in there. You'll get it. You will get it.
He ain't got no choice.
You're not gonna let him go, right, Mo?
No, absolutely not.
Well, thank you for coming to class.
Thank you. I will.
Yeah. Any other?
All right. Thank you very much too.
You're welcome. You're welcome.
Thank you. Yeah.
All right, y'all. I will put this recording on YouTube and we will wrap it up for the week. You guys have a good night and happy trading.
You too. Thank you, Tasha.
Okay.
All right.
Bye,
Thank
y'all.
you.
Bye-bye.
Outstanding meeting.
Okay. Thank you.
Thank you, Tasha.
You're welcome.